evening and welcome to another edition of Capital Market Live on Channels Television, where the market speaks and we analyze. I am Will Ibong. We kick off with the news that came in on Friday. Nigeria's officially been removed from the Financial Action Task Force's FATF grey list, a global watch list for countries under increased scrutiny for money laundering and terrorist financing. Mozambique, Burkina Faso and South Africa were also delisted after meeting key reform benchmarks. Analysts say that the move will boost investor sentiment, will ease capital flows and strengthen Nigeria's credibility in the global financial community. Congratulations, Nigeria and the other countries involved. Now we move to the House of Representatives, which is moving to bring in more order to Nigeria's fast-growing digital finance space. Lawmakers have begun steps towards regulating cryptocurrency and point-of-sale operations across the country. Our business anchor, Larry Williams, spoke with the chairman of the House Committee on Cryptocurrency and POS, Representative Olufemi Bamishile, who shared insights on the proposed framework, including concerns over the minimum capital requirement recently set by the Securities and Exchange Commission for virtual asset service providers. Let's see the interview.
All right, joining me now is Honorable Olufemi Bamishile, representing Ekiti Federal Constituency and a chairman, House Ad hoc Committee on Cryptocurrency and POS. Honorable, it's great to have you on the show.
My pleasure. Good afternoon again.
So, Honorable, there's this talk about, cryptocurrency exchanges, in Nigeria. We're trying to get local players right here, but they say regulation is causing some kind of slowdown, with getting more Nigerian exchanges. We've seen that there's a 1 billion naira level set, by the SEC. That's the kind of money you should have as a cryptocurrency exchange, in Nigeria to be able to operate here. And I've heard that you're not really in support of that number. So talk to me about the, empirical data, stakeholder feedback that the committee, is relying on in recommending that the 1 billion naira minimum capital requirement, that be reviewed, either downward at this time. How are you seeing that?
Yeah, thank you again for the opportunity this afternoon. It's crystal clear, without a shadow of doubt. Our committee is clear on one thing. Regulations will protect investors without strangling innovation. That's very, very clear to us as a people. And the SEC, their goal is very valid, no doubt about it. But our review shows that Nigerian capital requirements is far higher than global norms. And that's the issue that we have with SEC. For instance, under the EU, markets in crypto assets, MICA framework. Naturally, the minimum capital is about 212 million, if I'm not wrong, while our range is from 500 million to 1 billion naira. But without a doubt, that difference is way too huge. And we also found out that most Nigerian cryptocurrencies don't even hold customer money. They build to manage the technology behind transactions. It's unfair to treat them the same way as firms holding investors' funds. So we spoke with investors and operators and consumer groups, and they all agreed. Rules should match the risk, and that's the truth. So firms that hold funds should make higher capitals and insurance standards, while pure tech firms can have lower thresholds. This balance keeps investors protected while allowing innovations and to grow at home. These are the things that we standing within the committee. We are keeping the rules strong while the risk is high, but fair when the risk is low. Those are the basic things that we stand with within the committee as we speak.
So, given your observation that the 1 billion naira capital requirement may discourage, smaller entrants, how do you plan to balance promoting, financial inclusion, especially for startups and youth-led crypto firms, while still protecting the financial system and investors?
Oh, thank you so much. The committee's position is very clear on this. Regulations must open doors, not close them. Nigerian digital economy is being driven by a new generation of young Nigerians, many under the ages of 35, who are already building payment solutions, wallets, compliance tools and revival global peers. And that's the truth. When we set rules too high, we don't protect the system. We export our brightest minds. Our kids leave the country and go into other countries to do these things. So those small young builders simply register abroad, and Nigeria loses jobs, skills, and tax revenue. So the committee is recommending that Nigeria Forced Licensing Pathway. Get it right. Nigeria Forced Licensing Pathway. I think you understand where I'm coming from regarding that. They will operate smaller capital, cap exposure, mandatory mentorship, while SEC and CBN jointly track compliances. As capacity grows, these firms graduate to higher ties and broader responsibilities. This mode keeps innovation inside Nigeria, builds trust, support the president's vision of inclusive youth, young empowerment, poverty reduction through innovation. And the main line to this, we're not shutting out the youth. We're giving them a safe runway to build a Nigeria first digital economy that we're all expecting for this country, Nigeria.
All right, so let's imagine that the SEC, agrees to review or lower the requirement. What specific, oversight mechanisms like licensing tiers or phased approaches will the committee propose to prevent, abuse or regulatory, arbitrage in the digital assets sector?
No, the truth about this is lowering capital isn't just about lowering discipline. It's about smarter oversight that encourages enterprise while protecting national interest, which is very, very key to the committee. The committee is proposing a three-phase oversight structure aligned with the president's Nigeria First economic vision. Number one, incubation. Each state farm operates with strict reporting, limited exposure, and regular supervision. Tier two, which is tiered licensing. Farms are grouped by activities, technology services, brokerage aids, and custody exchange with proportional capital, audit, and cybersecurity rules. The third one is unified regulatory dashboard. Relevant agencies share real-time data for transparency, helping government plan around job creation, financial inclusion, and innovation growth. This coordination move removes duplication, strengthens accountability, and ensures that every digital transaction supports Nigeria's fiscal and employment goals. Our very key stand within the committee is very straight. We align regulations with reality, no innovations, inclusions. So innovations, inclusions, and national growth can thrive under responsive Nigerian visibility. And those are the things that we're looking at within the committee.
All right, definitely. We'll keep tracking, all of that and how that plays out for the Nigerian context there. It's all about regulating cryptocurrency and not stifling growth. Thank you so much for joining us today. That was Honorable Olufemi Bamishile, representing Ekiti Federal Constituency, Chairman, House ADA Committee on Cryptocurrency and POS. Thank you so much for coming on today.
I appreciate you a lot for this opportunity and time. Thank you so much.
Thank you, Laddie, for that interview. Keep an eye on the framework the House of Representatives is going to come up with, and we'll see how that plays out for investors in the country. But we have with us in the studio Kayode Esenyi, is an investment associate at Cardinal Stone Securities Limited, is joining us to break down the facts behind the news. We had a lot of things coming this week, and he's going to be giving us insights as to what to expect. Mr. Esenyi, it's good to have you on the program.
Thank you very much for having me.
So we'll just kick off with FATF's latest news from FATF. Nigeria has been delisted from the global grey list of dirty money. So per se, is this just, and we had the president say this was on the back of, economic reforms. How would you say this will benefit Nigeria in the long run?
So I think it's actually a good one, and it speaks very well to steps that have been taken by the regulators in the Nigerian finance ecosystem, partly the CBN as well as the NFIU, particularly essentially ensuring that Nigeria is in line with global best practice in terms of anti-money laundering controls and countering terrorism financing. And I think it's a very good step because it essentially makes sure that for global investors who are considering investing in Nigerian ecosystem, who have doubts as a result of being grey listed, now they have nothing to worry about essentially, or at least it shows that we are taking steps to ensure that our financial ecosystems and money movements is being done in a very, very efficient manner.
Now, so being 3 years on that list, that watch list, what did it make of Nigeria? What was the perception for investors? How much did you think we lost?
So I think it was essentially a wake-up call. I'll try not to focus on what we lost, but basically on what we learned from the process. So it's essentially a wake-up call for us to sit back and realize that there are things that we're doing in the past that we're not doing properly, that we have to understand that, and now there's a new global-based order that we have to comply with, and there are rules and regulations that we have to put in place to ensure that people are not taking advantage of the global ecosystem, and particularly in the Nigerian finance space.
Okay, speaking of the economic reforms that they've been praising and commending Nigerian government, our NGX is apparently bolstering and moving its way to the 100 trillion naira mark. Right now, it seems like nothing is going to stop it from that, meeting that milestone. But would you say it's still signaling investor belief or confidence in Nigeria's economy, or this is something else playing out here that we don't know about?
Oh, okay. So to understand the Nigerian equities market performance, I think it's important to understand it from the global perspective, right? If you look at the global backdrop leading into 2025, particularly Q1, Q2, we're starting to see a lot of uncertainty about global trade in particular. And if you recall, dating as far back as 2003, 2004, global trade has accounted for over half of global GDP. And so anything that happens to trade essentially will affect global GDP. And as a result of those uncertainties that I mentioned, particularly in the US, China, the brewing trade war that seems to come to stay, it started to look like these uncertainties would lead to global downgrade in GDP growth. And we saw those expectations play out. Both the World Bank and IMF came out to essentially downgrade growth expectations in terms of GDP for several, about 60% of the countries in its coverage. And then when you look at that and contrast it with what we happen in Nigeria, the reforms you mentioned, for example, though initially there was basically short-term pains for long-term gain, as the president had put it himself. But currently, we are starting to see those long-term gains starting to play out. For one, inflation has been dropping consistently for a couple of months now, and even the latest GDP print shows that the economy is basically doing significantly better than it was before. And so when you contrast that global weakening macros and then Nigerian space pointing upwards, basically, it started to look like Nigeria is the place to be in terms of investments. And then add on top the fact that several companies who essentially were beaten hard as a result of the surging inflation, particularly last year, FX losses and what have you, most of them are starting to recover. So we have strong macro backdrop in Nigeria versus a weakened backdrop outside the country, improving macros, significantly better, and it just goes to show that the Nigerian space was set and ripe for a bountiful harvest, let me put it that way.
You're talking about bountiful harvest. You know that a lot of people are positioning right now to be able to benefit from the equities market. The pensions fund is no different from that. Well, I'm sure everyone is positioning right now. The equities market seems like the place to be. So how much of this, because they account for like a third of the total investments that we see in that space, but how sustainable is this strong push for equities, and are we going to see any pullback anytime soon? A correction in the offing, because the bulls might not always stay bullish?
And so for the equities market, particularly the pension funds, like any other investor you think of, they have always been on the lookout for things that for long-term returns, really always trying to seek alpha, even in terms of uncertainty. And I mean, uncertainty aside, if you look at Nigerian equity space now, what we are seeing is strong earnings growth, earnings rebound, earnings recovery, margin expansion, all kinds of terms have been shown around right now. But all of it just goes to show that it's looking like things are significantly better than it once was. And as long as those factors remain, we're likely to see the bulls continue to hold their own. And then when you add on top, like quite a number of companies, for example, MTN in the telco space and FMCG space, even some oil and gas names and what have you, who have stayed away from paying dividend over the past 2 years as a result of the issues they've had, most of them are likely to start paying dividend, if not this year, starting from next year. It's starting to look like, if anything, there's still a significant legroom for growth and expansion in terms of earnings quality and earnings growth. And so it's starting to look like the equity space might actually be on a bullish trajectory for quite some time. Let me not try, and I don't have a crystal ball like they say. But and then again, I feel like if anything, we like I said earlier, we still have a long time to go, a long way to go in terms of this earnings expansion. Okay. And compared to what we saw before in terms of ROE, margins expansion, if anything, some of those numbers are still showing like we are still significantly below. For example, in terms of margins for SMCG names, most of them are still operating below the margins we saw in say 2022, 2023 era. So that just goes to show that there is still significant leg room. And in terms of valuation, again, the equities market is still performing or currently trading significantly below its long-run mean. And so that just goes to show there is still room for expansion in terms of both earnings growth and margins expansion. So as long as those factors remain, we are likely to continue to see pension funds and, quite frankly, other investors continue to pay attention to the Nigerian ecosystem.
Fantastic. Definitely, we'll look out for those growth, and then we'll talk about more growth when we come back. Right now, we want to take a quick break. Capital market continues right after that. Don't go away. Welcome back. We still have Kayode Ese in the studio with us. He is investment associate at Cardinal Stone Securities Limited. And we've been talking about the growth in the equities market. And speaking of growth, we're talking about one of Nigeria's listed companies, VFD. We just have a rights issue, and primarily, they're one of the active stocks that we have most traded. They're quite liquid in the market. And then they have this rights issue now valued at, say, 50 billion naira, and for 10 naira per share. Okay. So how would you describe this? How do you think they're going to make? Are they trying to make the market capitalization, or they're just seeking expansion here?
So it's thank you very much for that question. So VFD, the VFD story is one of the stories I've followed keenly over the past 2-3 years since they listed around October 2023, if memory serves, and it's quite frankly an interesting one. And so to answer your question, right, the capital raise is mostly, at least going by the prospectus that was issued, is mostly an expansion play. The company is trying to integrate across several verticals that is operating and take advantage of the improving macroeconomic conditions and go as far as it can in terms of operational efficiency, going as far as acquiring new technology, and just ensure that its operations are working as efficiently as possible. So it's mostly an expansion play, not necessarily a market cap or regulatory play.
Okay, so would you, as an analyst, take advise investors right now to take up this stock, and why would they take up this stock? What are the benefits of having this share?
Okay, so I would say yes categorically, because if you look at the strong momentum that the company has been able to deliver just within this short time frame it has listed. For one, right, I recall gross earnings for the company going by over 100% within a three-year period, which is quite frankly impressive, especially when you look at the macroeconomic conditions within that time frame, and then aside from gross profits, even operational profits even did significantly better than that, going by around 300% within, again, the same time frame. And that just goes to show that aside from even just growing revenue, the company is able to deliver well on its cost efficiency. And that just goes to show that the management of the company is able to sweat its assets and deliver shareholder value. If you look at even aside from the numbers themselves, if you look at the brand equity the company has been able to deliver for itself within just a very, again, short time frame, having assets of north of 350 billion within less than around 20 years of operation. That just goes to show again that there's quite a lot of good stuff happening around in the company. And again, I think it's a really, really good one.
Okay, so VFD, we do know, is one of the largest mortgage banks we have in Nigeria currently. And this is a rights issue. That means only those who are existing shareholders get to participate. So how do people who are not existing shareholders get to participate in this rights issue?
Okay, in theory, or rather on paper, I mean, what a rights issue essentially means is only available to existing shareholders in the business. But really, what usually happens is quite a number of people who cannot participate in their rights for one reason or the other, usually trade those rights. And so if you are not an existing shareholder and you are looking to participate in the consideration or in the transaction, rather, it's very easy for you can reach out to Cardinal Stone Securities, who would be more than happy to help you to transact and acquire some of those rights that adventure wouldn't be taken up by existing shareholders. And you can also alternatively reach out to Ancario, which is the key stockbroker in the transaction themselves, and they will be more than happy to also help you with acquiring some of those untraded rights.
So speaking of the shares now, we'll have a lot of companies issuing rights issues, doing public offerings, IPOs, just to meet CBN's capital requirements, new capital requirements. Is VFD as a mortgage bank under any pressure as to how to raise their funds, or they don't have that already set out for them and already planned out, a strategy
so for VFD as a group, as far as I'm aware, they have two entities, subsidiaries rather, regulated by the central bank. And again, as far as I'm aware, both of those regulatory companies rather have exceeded their threshold in terms of regulatory capital requirements. And so, like I said earlier, this is basically an expansion play, not necessarily a move to meet capital requirements from the CBN or any other regulator. The company is well run and it's performing significantly better than its required capital. They are looking to expand into. They have quite a number of businesses under their operations. They are in the hospitality business, they are in the real estate business, they are in the traditional finance, like you mentioned. They also have a fintech business within their play. They have an asset management business, and quite a number of other ones. And so they're just trying to see a way to expand most of these businesses, not necessarily a need as a result of a need to raise capital to meet regulatory thresholds.
Okay, can you speak more about the fundamentals of VFD right now, and what value would it bring to investors, say, per chance I want to pick up shares of VFD right now? What would be the return value for me? Why would I want to pick up VFD? Okay,
so I'm quite optimistic about the transaction for three main reasons. Number one, like I mentioned, is if you look at the earnings growth, the company has been able to deliver, even in terms of during a time of weak macro backdrop. It's quite impressive when you compare it to anything. But even away from the numbers in terms of operational performance, if you look at the company's dividend policy, it's also quite impressive. They have been consistently able to deliver the dividends to shareholders. And then aside from all of that, the fact that the company maintains strong presence in several in several spheres of the Nigerian capital market just goes to show that it's one very simple way for you to invest and have a bird's eye view in terms of returns of the entire capital market. For starters, I know the company is a shareholder on the NGX itself. The company is also a shareholder on the NESD, CSC. There's quite a number of key capital market operating companies, really companies that you see as essential to operations in the investment landscape in Nigeria and will benefit from any significant increase in capital market participation. And that just goes to show that VFD Group is well positioned in terms of reaping the benefits of any significant improvements in macroeconomic backdrop. And so it's just one way to think of it as killing multiple birds with a stone, and for you to invest and sit back and relax.
Okay, look at other mortgage banks or microfinance banks that we have in the country, Akuda and the rest of them. Are we looking at maybe rights issues from any of these other, but they're not listed on the NGX right now? What are we looking at to bring them on as listed companies on the NGX and possibly give investors opportunity to key into these fintech companies?
So I think most of these companies you mentioned are in several and different growth phases in terms of their own trajectory. And so for most of them, I think, quite frankly, going by the regulators' body language and even by speaking to some of them themselves, it goes to show that at least for now, they might not necessarily be thinking of listing on the exchange, but for those who are willing to, who feel like they have gotten to a stage where they are willing to come and be as transparent as required by the Nigerian capital markets and the NGX rules, I think the capital markets will more than happy to welcome them with open arms. But for now, I think for most of these guys who are still in their early startup phases, most of them, particularly the fintechs, maybe the traditional guys not so much, I think they would want to continue on their current trajectory and we'll see how it goes from there.
Okay, but is there anything stopping them from listing? Because I remember the NGX did mention that there is a growth board on the NGX that allows companies to be able to come in with less maybe paperwork, or let's say regulations or strict requirements, so that they can actually grow. What is stopping a lot of fintechs? Because I don't see a lot of them listed on the NGX.
Think in terms of the NGX and taking steps to ensure that the capital market, the stock exchange rather, is welcoming to fintechs and most of these guys, I think they've done significant work in that regard. But the average Nigerian investor, I would say, is still very, very, how will I put this? Very, very connected to profitability, and that's why most companies coming to list on the Nigerian Stock Exchange would rather prefer that they get to a stage of profitability, because, I mean, as against other markets, say the US, we have developed markets like the NSD and quite other stock exchanges where investors don't necessarily expect profitability from a fintech. The average Nigerian investor, I'm thinking yourself included, would rather see a profitable company to invest in than not. And like I said, most of them are in their early growth phases, not necessarily delivering profit to shareholders now. They might be thinking that it might be too early to come to the exchange. But yeah, the NGX are taking steps, but it will take a lot of reorientation for the Nigerian investor to move away from profitability in the now. And as far as I can tell, that still have a long way to go in that regard. And so as long as those sentiments remain, as long as investors would expect profitability from a company before it lists, especially in the Nigerian investment ecosystem, I think most of them would still stay away. And quite frankly, if you look at some of those financials, that at least the ones I've come across, you have come to see that quite a number of them are still doing well. Not so much, but I mean, same level of growth and returns you expect for a startup in early stage of growth anyway. But yeah.
Thank you so much, Mr. Kayode Esiayin, Investment Associate with Cardinal Stone Securities. Thank you for sharing your perspective on capital markets, and we look forward to more conversations, especially with the profitability of fintechs in Nigeria and possibly having them listed on the NGX very soon. And that wraps it on this edition of Capital Markets. Remember, whether the markets are bullish or bearish, I always say knowledge is your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can catch this again on our YouTube channel. I'm Will Ibong. Thanks for watching, and I'll see you next week.